Hello everyone and welcome to Moementum channel. My name is Mo, and in this video we're going to be taking a look at two dividend stocks that are fast growers, and these are considered to be undervalued stocks. Perfect investment opportunity for investors in the year ahead. The first company for us to review is no other than Amgen. It is a healthcare biotechnology company that is traded on NASDAQ with ticker symbol AMGN. Amgen currently pays a dividend yielding at 3.47% annually, and it was last traded for the price of $223.79. Amgen has a dividend safety score of 74, making this stock a safe dividend payer. Amgen's market capitalization is at $126 billion, making it a mega cap company. Amgen is an American multinational biopharmaceutical company headquartered in Thousand Oaks, California, which was founded in 1980. Amgen's portfolio is reasonably balanced, and almost all of the firm's largest drugs were launched over 10 to 20 years ago, but they continue to contribute the majority of Amgen's revenue today. In fact, its 6 largest drugs account for around 60% of the firm's revenue. You notice here Amgen's dividend growth. It was last grown in December of 2021, and by amounts of 10%, making it a fast dividend grower over the last dividend increase. From a volatility perspective, the stock of Amgen, AMGN, has a volatility score of 0.63. A beta score is a measurement for volatility of the stock price, and a beta below 1 suggests that the stock is less volatile than the general stock market. Looking at some key metrics from a dividend perspective, the payout ratio for Amgen is at 42%, which is edging higher for biotech's company, and their forward payout ratio is at 45%. Typically, a payout ratio hovering between 20% to 60% is a comfortable range for us when we're assessing the payout ratio for a dividend-paying company. In terms of their dividend streak, you notice here that the company has been paying its dividend without any reduction over the past 9 years. And if you look at their performance during the recession years of 2007 to 2009, their sales was down by 2.8% only. And that is actually considered quite good because it's in fact above average growth during those years compared to other companies. And their recession return during those 2007 and 2009 years was the stock price was down by 19%, which definitely beat S&P 500's negative 55% return during that time frame. The other dividend growth historical rates, if you look at it, the last 5 years, the company has been growing its dividend annualized 15%, which is making it a very fast dividend grower in that sense. Let us take a look at some other metrics. For example, you here notice that from the graph, their annual dividends per share and the amounts, how it's grown since 2010. You'd also notice that the annual payout for this stock is at $7.76 per share, and the dividend is paid on a quarterly basis. This dividend is paid in the months of March, June, September, and December. Next, we're going to take a look at some valuation metrics. Amgen's current dividend yield of 3.74% is 22% above its 5-year average of 2.85%, indicating that now could be a reasonable time to invest unless you believe that the company's outlook has weakened. We're going to, of course, take a look at a number of other metrics too, not just purely relying on the dividend yield to make that decision. Amgen's forward price to earnings ratio of 13 is about in line with their own 5-year average of 13.9. As a result, the market appears to be valuing the stock similarly to how it has done that in the past, suggesting that Amgen could be fairly priced if you believe in its long-term prospects and the company's health. It's interesting as well that the forward price to earnings ratio of Amgen is lower than that of the sector. The healthcare sector price to earnings ratio is at 18.1. The last trading price, if you notice, $223.79, is hovering a little bit closer towards the 52-week lower price range. The lowest price range in the past 1 year for the stock was at $198.88, and the highest was at $259.14. Next, we're going to take a look at a number of other metrics as promised to dive deeper a little bit into this stock and analyze it. And hopefully by showing you what are some of the key metrics that we use in analyzing stocks that provide some sort of education for you as you investigating other dividend paying stocks or this stock, for instance, for that matter. Earnings per share is one of the key metrics that we take a look at. We would like a company that consistently grows its earnings per share year after year. Here we are going to take a look at the past 10 years, and we also take a look at the last 12 months and next 12 months in terms of projection. We do see a lovely growth of the earnings per share year after year. It's almost like a step by step growing. In the last 12 months, the company showed an earnings per share of $16.06, and for the next 12 months, it's projected to have earnings per share of $17.20, which, if that holds true, that shows a 4% increase compared to the previous year. Next metric is shares outstanding. Ideally, we would like to see a company that over time it's reducing the amount of shares that is outstanding in the market. This gives you more share of the pie, for lack of a better term, for the investors. In this case, you notice that for the most part, we are seeing that declining trend in a positive way, of course, that the outstanding shares is reducing. For example, in 2020, there were 590 million shares outstanding compared to 2011, whereby we had 912 million outstanding shares. In the last 12 months, this number appears to have declined too, and it is now at 578 million outstanding share in the past 12 months. Next, we are going to take a look at the company's sales or revenue. Ideally, we would like to see this revenue growing year after year, just ability of the company to increase and expand its business. That's a healthy sign if we see. And here we are observing that. In fact, in 2020, the company reported $25.4 billion in sales, and the last 12 months, they are providing $25.8 billion in total sales. Lastly, we're going to take a look at return on equity. And it's a measure that how many dollars of profit the company earns for every dollar that shareholders have invested in the firm. For biotech companies, we would like to see this return on equity above 25%. Well, there were some years that this was not met, for example, in 2011 or 2017. In the past several years, since 2018, the company has knocked it out of the park. And the last 12 months, the return on equity is showing to be 59%, way better than what the typical expectation is from biotech companies. With that out of the way, we're going to take a look at some historical trends for the stock price. The past 1 year is shown on the left side, and the past 5 years is shown on the right side. You notice for the past 1 year, the stock of Amgen had a return of 0.06%. Probably not the greatest return. It's fairly flat in that sense. Keep in mind, though, the stock has been paying you dividends. And in the meantime, as the stock has some volatility, those kind of declines in the stock price are great opportunities for dividend investors who believe in the company to actually take advantage of it and add more to their existing shares. The past 5 years, though, the story is a lot better. In fact, the storyline here shows that the past 5 years, the stock price was up by 53.06%, close to, if you round it, actually 53%, or roughly about 10 or 11% annualized return. Just remarkable in that sense. This does not take into account your dividends. You could have had your dividends as well earned and reinvested, which would have possibly resulted in improved returns over the long span of time too. Next, we're going to take a look at the number of other projections. We're going to take a look at how dividend analysts that kind of cover this stock are expecting this stock to perform over the next 1 year. According to analysts on TipRanks, 14 analysts covering this stock, 4 of them have a buy rating, 9 of them have a hold rating, and only 1 has a sell rating, giving overall the stock a hold consensus. The estimated 1 year price target for Amgen is at $230.25. And if that holds true, that shows an upside of 2.89%. Perhaps not the greatest upside in terms of stock appreciation, according to analysts' expectation. But keep in mind, the company has a lot of room to grow its dividend, and it's been paying its dividend for the past 9 years and is a solid dividend payer and fast grower in that sense. The range of the analyst's expectation, though, differs. The low price range is at $185, and the high is at as high as $272 per share. Next, we're going to take a look at the analyst on Yahoo Finance covering the stock. They have a projection of $240.04 for the 1 year price target. And lastly, we're going to take a look at Simply Wall Street and analysts here, whereby they take a look at the fair valuation for the stock based on underlying factors. And here, according to them, the fair valuation for the stock is at $441.70, suggesting the stock is undervalued by 49.3%. We hope you find this video beneficial so far. We've gone through a one of our first picks when it comes to a dividend paying stock that is undervalued based on our research and is a great option for investors in the year 2022. If you found this video beneficial, we appreciate if you can give this video a thumbs up, and don't forget to subscribe to our channel for more such videos. Without any further ado, now let's get into our second pick. Our second pick here is a company called Bristol Myers. It is also in healthcare. It's a pharmaceutical company, which in fact is headquartered in New York. Bristol Myers is one of the world's largest pharmaceutical companies and is consistently ranked on the Fortune 500 list of the largest US corporation. Bristol's portfolio is somewhat concentrated, with its 3 largest drugs accounting for more than 60% of sales, and they are set to lose exclusivity between 2022 and 2028. That could be a little bit of red flag and concern, but to provide some protection against that looming patent that Bristol Myers is facing, they have done some acquisitions. For example, they bought biotech giant Celgene in 2019 for $90 billion and spent $13 billion in 2020 to buy Myocardia, a development stage biotech firm expected to deliver substantial growth in the second half of the decade. That's how they're trying to kind of de-risk their kind of future and expand their potential for having a growth in their revenue in the years to come. Bristol Myers currently pays a dividend of 3.48%. It has a dividend sensitivity score of 79, making it a safe dividend payer. Bristol Myers has a market capitalization of $138 billion, making it another mega cap company that we are reviewing. Their stock price is definitely a lot cheaper than, or lower is probably a better term, than the Amgen that we reviewed so far. The price target here is that the price actually for the stock is at $62.05 based on the last closing day. The last time that the company increased its dividend was in December, and they increased it by 10%, making it a fast dividend grower in that sense. From a beta or volatility perspective, Bristol Myers is considered to be very low volatile company with a score of 0.39. Moving on, let's take a look at some other key metrics. The company has a payout ratio of 27%, which is low for biotechs, giving it a ton of room for it to continue to increase its dividends. Its forward payout ratio is also low at 28%. The recession performance, you'd notice that their sales was down by close to 21%, which was below average growth during 27 to 29. And the recession return was 32% negative, which was better than the negative 55% return of the S&P 500. Next, we're going to take a look at the dividend growth. While their last dividend growth was 10%, their last 5 years, they have increased annually by 5% their dividend, and in the last 20 years, since the company has been paying its dividend for that long, their annualized increase of dividend has been 3% per year. Next, we're going to take a look at the company has been paying its dividend for 30 years, of which the past 14 years, they have increased their dividend year after year. They do pay their dividend quarterly, and the annual payout is $2.16. In terms of valuation, their current dividend yield of 3.48% is 17% above its 5-year average of 2.97, indicating that the stock may be undervalued. Also, it's worth noting that Bristol Myers' forward price earning ratio of 8 is well below their own 5-year average of 11.3. This could suggest that maybe analysts are somewhat pessimistic about their company's prospects for growth. But if you believe that Bristol Myers' health and long-term outlook remain solid, then this could be a very, very attractive opportunity, because the stock is actually trading a lot lower than it has typically been in terms of multitude for price to earnings. If you look at the 52-week price range, the past 1 year, the stock is hovering halfway in between. The lowest price range was at $53.63, and the highest was at $69.31 in the past 1 year. Next, we're going to take a look at a number of other metrics. Earnings per share. We are kind of seeing that increase, though there is a little bit of that valley. You see there was a little bit of that hollow towards 2013-14, but since then it's kind of picked up drastically. And in the last 12 months, the earnings per share is at $7.13. The next 12 months expected to be at $7.74. If that holds true, that shows a growth of 9% for the earnings per share. Their outstanding shares, for the most part, they've maintained it between 2011 to 2019, but in 2020, they've actually definitely issued new shares. Not the best sign, a little bit of disappointing for us, but anyway, for the last 12 months, there are outstanding shares is 2.23 billion shares. So 2.23 billion outstanding shares for the company. In terms of their total sales, similar story to that earning per share, a little bit of that valley in the middle, but the last 12 months, they've kind of done outstanding at $45.5 billion. And 2020, they knocked it out of the park with $42.5 billion in total sales, way better than what they have ever reported in the past 10 years, almost doubling the amounts that they've reported in the past. And lastly, in terms of return on equity, that's probably where the company is not doing so well. While we were expecting 25% preference for biotechs or more for return on equity, the last year, you can see in 2019, it was only at 11. In 2020, it was at negative 20%. And in the last 12 months, also negative 12%. This could be suggesting that the company is not making profit. And while they have growing their revenue, but their income and net income is not keeping up with it. In terms of the stock return, the past 1 year is showing 1.52%, fairly flat, similar to Amgen. But the past 5 years is doing a little bit better, but nowhere close to what Amgen was providing. Amgen had upwards of 50% return the past 5 years. With Bristol Myers, you're fairly stagnant. The past 5 years is showing 6.18% return. This does not, of course, take into account your dividend amount. There are 11 analysts in chip ranks covering the stock. 6 of them have a buy rating, 5 of them have a hold rating, giving it an average of moderate buy. The price target in 1 year is $67.63, giving it a 9% upside potential, with the highest price being at 75% price target, lowest being at $58. If you look at the analysts on Yahoo Finance, we have a 1 year target established at $72.50. And lastly, if you look at the Simply Wall Street analyst from a fair valuation perspective, the stock is showing to be having a fair valuation of $220.35, or being undervalued by 71.8%. I do kind of take some of these calculations with a grain of salt. Just keep that in mind. It's not always how this fair valuation is calculated, but also how the investors believe the fair valuation of the stock and how they react to it. So treat that with a little bit of grain of salt as you go through it. I hope you found this video beneficial and gained something of value from it. Here on Moementum Finance and Investing channel, we post every week several videos about investing in the stock market, cryptocurrencies, real estate, and different ways to reach financial freedom. And we hope that you gain the knowledge and expertise, hopefully through these type of videos, to be on your way to reaching financial independence. If you found this video beneficial, don't forget to give this video a thumbs up and share it with someone who might benefit from the video as well. And we'd love to have you join us on our journey. Don't forget to subscribe for more videos on our channel.